Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. We are broadcasting to you live from New York City, traders. And I would like to say this video is being shot on Tuesday for Wednesday's trading, 04/22/09. And what we're going to talk about is this. Flip-flop again in the Omni. The Omni's pointing up. Indicators look as bearish as can be. Omni pointed down yesterday. We caught a nice 14-point trade. Oh, I got my jacket back. I won my jacket back. Thank you, Omni. Thank you, Omni. All right, baby. So here I am. Got the jacket back on. All right. So listen. What I'm expecting, because we are hovering around the Omni proprietary moving average in all the indices right now here in the U.S. and many abroad, we're getting the Omni flipping back and forth, red to green. I want to show you something that's very interesting that the S&P is doing right here and right now. Traders, repetitive patterns work very well. Repetitive patterns. When you see something repeating itself over and over on a price chart, the likelihood is that it will repeat itself once again. Until it stops repeating itself, you should use that pattern to trade around. With that in mind, traders, I'd like to show you a chart for the S&P because we got that green Omni for the S&P tomorrow. We are looking for a pullback. We expect some downward action first, then the market to move higher. What I'm not going to show you a chart about tonight, but maybe in tomorrow night's video, if we get lucky and I get to do another one of these from here from New York City, is the soybeans. Soybeans, they put the double top in, had a nice big down day, turned around the next day being yesterday, Tuesday, and rallied up and closed at their highs. Very interesting, traders. Soybeans look like they could probably blow out of this using the 2-day down in a bull market rule. Beans have gone down for 2 days. We'll see if we want to count today's action as a full down day. It did go lower than the day before. But I say let the beans test themselves and head back up. And if they do, we will talk about trading beans for Thursday. In this video tonight, we are going to cover the repetition, the patterns that repeat themselves. I'd like to show you right now a chart of the S&P. I think you will see exactly what I'm getting at, traders. Let's go look at the chart. Okay, traders, the chart I have before your eyes is the only chart we will show you this evening. It is the S&P daily bar chart. Each one of these green lines here represents 1 day's trading. Traders, we are in a parallel channel, as you can clearly see, defined by those red lines. But look at the action. 1 hits the bottom, 2 hits the top, 3 hits the bottom, 4 hits the top. 5 just misses the bottom, 6 hits the top, 7 just misses the bottom and catches just about the Omni proprietary moving average at the same spot. I'm thinking sweet spot right there. What should happen? 1, 2, 3, 4, 5, 6, 7. I think 8 is a very high possibility here, or probability, that we will rally up and end up testing the top of that parallel channel. Repetitive patterns work very well. Unless we fall out of love with the market and the market falls out of love with the Omni proprietary average and we drop down here below it, we have to continue buying dips. What else is in this story? Take a look at the way this has rallied. When it rallies up, starting back here, it rallies up, it has 1, 2 down days and rallies up. Has 1, 2 down days and rallies up. Has 1, 2 down days and rallies up. This time rallied up to this day and had 1, 2 down days and rallied up. Came down for 2 days and rallied up. Came down 1, 2 days, hit right here. I think it's going to rally up. What do you think out there in TV land? I'm telling you, that looks good. So indicators are pointing lower, and I say in this case, we will assume that we're going to go with formation over indicators. Now, traders, we are very close to the Omni average, and if we get below it, it negates all buying, and we become a seller of rallies. At this point, up till today, the NASDAQ, well, I shouldn't say NASDAQ wasn't involved, the transportation average, the Dow Jones Industrial average, the ETF Russell, they all started to come back towards the Omni average, test it, and bounce right back up again, just like the S&P did. It came right down, just about tested it, and rallied back out and settled up here. That's a pretty strong looking market, traders. So if this works, the repetitive pattern is this. 1, 2, 3, 4, 5, 6, 7. It keeps bouncing off of the channel. The other repetitive pattern is after making a high, it goes down for 2 days. It puts in a high, it goes down for 2 days. It puts in a high, goes down for 2 days, puts in a high, goes down for 2 days. So as you can see, repetitive patterns continue to do exactly what they're supposed to do. They repeat. And a lot of times you can get a good trade from repetitive patterns. So again, we will opt to take formation over indicators on this day. It is one of the reasons why we use stops. If it doesn't work, the stop gets hit, we are out of the trade and on to the next strategy. Do your own homework, traders. Pull your own charts. See if you can find this parallel channel and the action within it, and then look at what happened on those days when it stopped going up, how many days it would go down. You will find they are 2 lately. Okay, traders, again, do your own homework. Okay, traders, so you see that chart? Hey, look, repetitive patterns, they really do work. Now, I really like to go with repetitive patterns when the indicators are pointing in the same direction. In this particular case, indicators look pretty stinky. The market wants to go lower if you use just indicators. If you believe in formations take precedence over indicators in some cases, this would be one of those cases. I would make that bet. So let's see what happens with the S&P. We have a trade set up at our site. It's www.livewithoscar.com. For the S&P, I looked at a series of markets this evening. I have a decent gauge on what I'm expecting to happen. A lot of it revolves around the dollar index. So make sure you look at a lot of markets yourself and come to the site and be there so I can help explain it to you as the market progresses tomorrow. Okay, traders, the money show in Las Vegas, baby, May 14th and 13th, well, the 11th through the 14th, right? We are doing the money show in Las Vegas. For all you Omniacs around the world that are going to show up, do us a favor. Give us an email. Email us at Money Show. It's the RSVP Money Show at gmail.com address. If you let us know you're coming, we can plan for you, traders. If there's enough of you, I'll try to get a nice suite for us to hang out at, and the Omniacs can come together. So let us know if you're coming down. Book your tickets, traders. Come on down to the trade show. I would love to meet all the Omniacs. I have a show to do on the 14th. Middle of the whole room. I'll be on a stage right there. And, you know, we'll put on a presentation for you. But more than that, traders, I want to meet my Omniacs. So come on down and let's get together. All right, traders, give us a call anytime. Day or night, 702-629-4755. I'm getting out of here. I'm in my New York office. I want to go see what's going on in the markets. I'll speak to you shortly. Make sure you come on down to the site. Traders, don't forget a stop is your best friend. Always trade with stops and always place them first. All right, traders, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.